Welcome, welcome, welcome. We are back. Another day in the market. The big question is, are we back in a bull market or not? Let's talk about it. You're looking at the SPY chart right now. Very big level that it's trying to break above. It's been a very good past week in the stock market. Let's extend this out a little bit and let's see. In about the last week or so, we've gone up about 5%. Yeah, it just has not happened in a very long time. I don't know the last time the SPY was up 5% in 1 week. Don't even see it. So very good price action there. We're going to come back to this, talk about what's going on in the market. You had a lot of different things happen. Dogecoin today shot up. If you haven't looked at Twitter, it is now one of the main icons on the homepage of Twitter. I don't know how long that's going to last, but that is interesting. And of course, we've got oil, which had a huge gap up. We'll see if that affects gas prices. We had Tesla down 6% today. It's been rallying very nicely. But they did have a few different things happen. I'm just looking through the news right now. Tesla ordered to pay more than $3 million to black former worker. Obviously, I don't know what happened there, but I'm seeing some stuff about a racial harassment case. Even though $3 million is quite literally like cents to Tesla. But there's a bunch of things. They did have their delivery numbers come out over the weekend. And yeah, just not a good day today, but really good price action in general for Tesla in the past couple of weeks. I don't know. We will see. We're going to come back to stocks in like 5 minutes. Let me start off with what's going on in the crypto and other markets world, or just the rest of the world. And a quick shout out. What's up, Mr. Robinson, Zeke, Max, me, Tenderfoot, and AK in the chat. Hit the like button on your way in if you want to. And let's see, Bitcoin still testing 28.7K as a resistance level. It was support last May. It was support June of 2021 and January of 2021. It is currently a resistance you've been facing for the last couple of weeks. On the 4-hour chart, you can see it's just kind of found a range. That's really all Bitcoin's doing right now, just flagging in that range. And then you've got Ethereum as well. Nice breakout and back test of the $1,700 level. Moving a little bit higher now. You want to look at this like a wedge or a channel. Maybe it's kind of testing a breakout and a back test. So maybe that gives a little bit of a push to at least test the top of the range breakout. We will see. And of course, we cannot talk about crypto today without mentioning Dogecoin. Let's go to the 1-hour chart. As you can see, in just 2 hours, Dogecoin went up about 37%. So, excuse me. So yeah, Dogecoin 37% in 2 hours. I mean, what else is there to say? Elon Musk woke up and decided to put on the front page of Twitter. That's just something he has the ability to do now. And yeah, I mean, just looking at the chart after that, it was spending a lot of time testing that little inflection zone at 7 cents. And on this move up today, not only did it clear above the 200-day moving average all the way down here at 8 cents, but also took out this 9-cent initial 9-cent resistance level. You can see it's pretty important. It even dates back to some highs in February of 2021. And not only that, but it broke above it. And now you can see the new day for Doge or just crypto started about an hour and 22 minutes ago. And it actually flipped that level into a support. If we get on to lower time frames, let's go to even lower time frames on the 15-minute chart. We can look at it like this, where it had a little bit of a bull flag forming. There you go. And very quickly, it's kind of breaking out of it, kind of just as I went live. And you've, of course, got that 15-minute hidden bullish divergence as well. So let me just set up an alert here, just in case it decides to do something crazy while I'm streaming. We'll have an alert set up just above 10 cents if it does break above that, about 10% higher. So that is really it for Doge. Literally, as I'm talking, it's actually making a move off that breakout. Live price action right here, you can see. Very good past 20 minutes, going higher and higher. Yeah, still going. It might be going for the move right now, actually. Wouldn't be surprised if that alert hit pretty quick, but we will see. So just almost 4% on this 15-minute candle alone. Pretty interesting there. So that's it for crypto. Let's move over to metals. You've got gold. Look at the 4-hour chart. You got this triangle pattern. Kind of rejected the top supply line for right now, but it's a very nice looking triangle on gold. Then you've got silver, which has just kind of been uptrending for a while now. It is finding a little bit of resistance here, back from these highs in January. We've got the dollar currency index, has this massive inverted cup and handle look to it, but shorter term, you know, a little bit of hidden bullish divergence. You can maybe even draw out like a bullish bat over here. It's a little bit not deep enough. If it drops down to probably this support, which actually lines up with the neckline of this inverted cup and handle. If it drops down to that 101 level, it'll be a very big inflection area, because on one hand, you're going to be testing the breakdown of this massive inverted cup and handle, which is bearish, but also you'll be down at the pattern completion zone of this bullish bat with potential hidden bullish divergence. So that's a very big make or break area, even though it's trying to find a little bit of support just above that at 102. And then finally, the Hang Seng Index. It's open right now, kind of flat. It's had a really good past couple of weeks as well, breaking out of that downsloping channel. That's really about it for other markets. Just one last thing, the US 10-year. Rolling over a little bit. It was trying to get back above this support zone and the 200-day moving average, but it's actually flushed under the 200-day moving average over the past couple of days. So we will see if this does continue to help out the market. Of course, during this sell-off since the beginning of March on the 10-year bond, the stock market has been doing pretty well. So that is it for the other markets. Let's talk about stocks. Let's talk about the potential for being back in a bull market. It's been a very solid month of rallying, but of course you could have a bear market rally that's only a month long. And you know, we've had a lot of steps to this, right? It kind of started back last December when we initially broke out of this larger descending broadening wedge. Then we created like a little bit of a smaller wedge pattern to go back into, not only back test that same larger broadening wedge, these two green lines, but to also back test the 200-day moving average, use that as support for the first time in over the last year. I mean, not only use it as support, but like this is the first time you've used it as support since June of 2020, right? It's the first time it's kind of like holding above it since the beginning of 2022, but you haven't really got like a drop into it and then a bounce off of it since the summer of 2020 during that bull market. So we have confirmed that move. And then of course we again broke out of a smaller running wedge, and then we came up to test this zone between 406 and 411. And as you can see, this is where we are in the present. We are currently testing the top of that zone. So you have this zone that I drew out on the SPY. The reason for this is these lows from last May, some consolidation here, these highs, and then the top of this zone lines up with these two highs from the end of last year. And that is what you are testing right now. So on the daily, you're testing a breakout of that level. If you break above it, 416.5 is the next level. That is your high of the year so far. It was also highs from June of last year and lows from March of last year. This was right around the time that Russia I mean, it's been going on for a lot of years, but right around the time you had that huge news flash of Russia invading Ukraine, it was actually right around over here that happened. So we are now almost back up to those levels. We've consistently failed to break above those since we broke under it last May, and we're going for it again. This is probably the 1, 2, 3, 4. This is the 5th time that we're testing. Let me just delete all of this right now. That we are testing this. You have not been able to break above this since you broke it. This has been the area where every single time we've gotten up to, we've kind of dumped right off of. You literally dumped right over here. Look at how you just gapped down. Over here, you dropped all the way to the lows of the last 2-3 years. And then over here, straight down, over here, a little bit slower. And now you're going for it again. And, you know, the good thing to this, and I did look at this on the S&P 500 index, not the SPY ETF, on my last stream, is that you kind of have this inverse head and shoulders look to this move now. So we will see. The simplest way to put it is that this is the biggest area, right? Even if I just look at this zone like this, look at how many highs and lows you've had right at this level. There's just something about 410 on the SPY that the bulls and bears love to play. It's been a long day. Tug of war. That's where you pull both sides of the rope. I don't know why it took me that long to think about that. So that's that area where they play that game. yeah, let me just move on from that analogy. Okay, let's go down to lower time frames, and yeah, you can see that same kind of zone over here on the 4-hour chart. On my last stream, you were kind of breaking above this zone right under it, and I was kind of saying that that's your next level. You kind of went straight up to it. On the 1-hour chart, you're just in autopilot mode. There's no pattern I'm really seeing here. I mean, you could draw out your trend lines. I don't think there's any great way to do it. This is probably my best attempt at doing so, like that. Maybe look at it as a wedge, but you don't really have like complete moves back and forth. You kind of just got like 2 touches off that line, 2 touches off this line. I don't know. Do I think we're going to keep going straight up like this? Absolutely not. But it's just weird because like this is such a big level still, right? So we've already gone, I'm only going to start from last Tuesday, exactly a week ago pretty much, right? Just from this move right over here, we've already gone up 4% in just that week of price action, and there was really no pullback along the way. The largest pullback you had was last Thursday, and that was not even a 1% pullback. So we will see. The thing is, like, breaking above this zone, not only getting above this level, which you can see historically how important that is, even if you just simply break above, because you can see you initially rejected it this morning on your first test, right? But breaking back above this, like, it could just give you like a quick move up because it's such a big level. I'm sure a lot of other traders are looking at it. So as much as I want to say, like, you know, 4% in a week is a lot, like the pullback should come. At the same time, this is such a big level that we just haven't been able to break and hold above. And what if we are able to do it now? You could still go up a little bit more before pulling back. So, you know, I've traded puts. I actually made some profits on puts today on the Qs, but just as a day trade. But I'm not overnighting puts or anything like that, looking for a perfect top just yet, at least even short term. We will see. You had really good volume on Friday. Typically on moves up in the market during this bear market, we've seen decreasing volume, and we did see that for a good amount. We saw that up until right over here when you broke out of that little wedge, and now you're starting to see that volume hold up a little bit, at least for the last 2 days, but still is something. So that is the S&P 500. Moving on to the QQQ now. Another big level being tested. Look at these lows from May of 2021 and March of 2022. You're trying to break above that. You've got this gap fill just above you. It actually did not fill over here last August. Just above you at around 322. And I honestly did not think that this little move was going to happen, because to me for a few days it looked like we were getting classic bearish divergence. We were getting a double top, but you got the move, and that's all that matters at this point. So now you're again going for that. And at least for the Qs, and again, you've got that same, I'm not going to draw it out again, but you've got that same inverse head and shoulders look to it. Left shoulder, head, right shoulder. At least for the QQQ. Breaking above this, of course, you got that gap fill 2 points above you, but apart from that, really the next level there is like 330. You have a couple of highs here. Let me just try and draw out like all the little levels you have. But they're little levels. Like you have this little level, and you have this little level, and that's really about it. But this whole entire zone over here, historically it's straight up, straight down, straight up, straight down, straight up, straight down. This was kind of the only time you didn't go all the way to the top, but you still went straight up, straight down. It's entering a zone where historically when you've gotten into it, you've seen a very aggressive move in either direction. If you were falling into it, you saw a straight move down. If you were going up into it, you saw a straight move up. So we're going into it. I don't know if we're going to continue to see a straight move up because that started 2-3 weeks ago, but that's where you're at. And again, on the 4-hour, I think the wedge looks a little bit cleaner here on the Qs than the SPY. So I am watching this wedge, but hey, it could break up. We literally had a wedge on the SPY, or a channel on the SPY on the 1-hour chart, right? It was something like this, and it broke up, right? This was the channel on the SPY, and look what it did. It just broke up, which is very impressive for the bulls. Zeke saying tug of war, yeah, that's what it was. And Qs have a gap open around 322. Yeah, that's that next level. Just looking at it on the daily. You can see right over here on the 1 hour time frame, that's probably the closest level for the QQQ right now. Moving into small caps and mid caps, first off, you got the Russell 2000. It's really been lagging. You got the SPY and the Qs trying to make new highs right now. The Russell is close to even potentially new lows. It's only 8%, which for the Russell, which might be a little bit more volatile sometimes, is not that much. But it's at least rallied for the last week. You know, the Qs and the SPY have a couple of weeks of rallying in it. The Russell has like a week. And now it is entering a very big short-term level. You can see you got the 200 moving average and this gap fill, kind of even these lows and these lows as well. Right around 180-ish. So it's a very big test for small caps to see whether or not they can catch up. You know, very simply, if they're able to break above that, they might play a little bit of catch up as the SPY and the Qs has some gap fills and stuff like that. If you can't break it, they might just continue to lag the rest of the market, and then you have the potential for like you have that inverse head and shoulders on the SPY and the Qs, you have the potential for a regular bearish head and shoulders on the Russell. So I don't know how detached those indices can get, but they just have been detached for the last month. Yeah, also I'm seeing like some stuff like this. So let me know in the chat if the quality is okay or not, but I'm getting like this little warning right now. Okay, so that's it for the QQQ, and then finally the ARK ETF. Very interesting day today. Okay, you have this down sloping channel. You're trying to break out of it. You broke out of it technically on Friday. Now you're kind of still testing it. You back tested it, bounced off of it today, and this could be it. You're still testing the 200-day moving average. You're not really cleared. You know, I would say probably getting above this would clear you. You got these highs over here. You got this $41 level from these highs over here. This is the level, right? So you've got the breakout that it's working on. If it can break above that, there's not much till 45. Get above 45, there's not much till 52. Zoom out here. Take a look at this, right? We really kind of zoom out. Very similar price action with the choppiness down in this zone to really 2018 until the COVID crash. Like if I just extend this up, you can see that it's just this zone. It just, apart from the bull market and then the bear market, the craziness in between, this is kind of, I mean, I don't know if it's crazy to say this, but this is where ARK, I don't know if this is where ARK should be or if this is where ARK is valued. I'm not trying to say that. I don't know the fundamentals to be able to say that, but based on price action, this is an, I've never even said this on the stream before. This is an average price for the ARK ETF. Maybe not on paper if you like, you know, compile all the days of closes and then you divide them, whatever. But apart from an environment where you had major quantitative easing, stimulus being sent out, good rates, you went straight up, and then all the opposite of that happened, then you went straight down. This whole entire move over here was just a very crazy, I mean, at this point, literally looking at the chart, we could probably call it a bubble. And apart from that crazy move that happened because of COVID, because of news, and this outlier over here, all of ARK's price action is within this range. So I think very simply, if ARK is able to get back above the top of that, I think that shows that naturally, unless something crazy happens in the world, that naturally ARK can break out of this range, and it is doing well. And then if it breaks down from it, then naturally ARK shined during one of the easiest markets ever, and now it just can't catch up like a lot of other indices and funds. So this is a very, very big test for the ARK ETF in my opinion. It's been bouncing off of this for quite literally almost a year now. We've been at the same exact price on the ARK ETF, and you've never even tested breaking out of the 200-day moving average. You've been under the 200-day moving average really since May of 2021, 2 years ago. So for 2 years, it's been under that 200-day moving average, apart from a few exceptions over here. And this is really the first time where consistently for the past few months, past 2 months, it's been trying to break above it. And now you've got a little bit of a 200-day moving average potential breakout to help you do so. If we go over to the weekly time frame, let me just move this away for a second. you've got, it depends on how you want to look at this as like a neckline or something. If we're going to ignore this little couple of weeks over here, you got like a little scuffed inverse head and shoulders formation. You've got different things going on. So if there's any time that I've been looking at the ARKK in the past few months, now really is time. I mean, if you've been watching the streams, we've kind of ignored this for a lot of this choppiness. Now I'm really keeping an eye on it and a lot of stocks that relate to it. So that's pretty much it for the indices. You've got the VIX, bearish engulfing candle today. It's at a historical bounce area during this bear market. So I don't know, every time you've been here in the past year, you've bounced off of it, but at the same time, every time you've been up to this resistance on the SPY in the last year, you've rejected it. So is this a time where we make a change? We will see. We will see. And that's it for the indices. Let's talk about individual names right now. Let's start off with the swings. GameStop up 1% today. I did have some GameStop calls that I took profits on today. Had a nice little wedge set up. I don't know why the MACD's not loading, but I had hidden bullish divergence. My calls went up about 50%. And yeah, I mean, it still kind of is within this range of 22 and 24. Just draw it out like this. It's in the dead middle of the range, actually. So I'm still waiting to see which way that breaks out. We've already talked about this on the stream, but probably the rest of the swing depends on which way this range breaks. But still hanging out around the second target, even though it hit the third target on the first day of the swing. Then you've got Ford. This was alerted maybe a week ago, and it's almost at the first target. It's up 9% since the alert. Free alert, and the Discord link is in the description. If you're not in it, go check it out. Yeah, the Ford swing playing out so far. I mean, just got to go up a couple more percent at that first target and just really just at least test the 200-day moving average and the first target hits. You've got GM as well, which is starting to show a little bit of resistance at the 200-day moving average. I did put the target a little bit above the 200-day moving average because of where the stop was to make it more equitable. So I'm hoping for more than just a test of the 200-day moving average on this one. But nonetheless, the swing is up about 6%. And then finally, the newest one, Amazon, it's sitting right at where it was alerted. This was alerted, I think, Friday. The 31st, I think that was Friday. Yeah, this was alerted on Friday. So in the last day in the market, what I'm watching here is this inverse head and shoulders breakout test with hidden bullish divergence. First target lined up at this high, second target lined up at this high, third target lined up right under this inflection zone. And then the stop, if all of this fails, is right under that right shoulder. So it's been holding 96 since March 16th. As long as it continues to do that, it still has a chance. And that is it for the swings. Let's look into some other names. Tesla down 6% today. I talked a little bit about at the beginning of the stream, but it perfectly tapped to the first target on Friday for premium members. This was alerted as a swing down at 177. The first target was 205. It got up to 208 pretty much on Friday, and then now it's back down to 195. But of course, you had a lot of news, but in general, that level Y was at the first target. Look at these lows from June 14th of 2022 and July 13th of 2021, or just around those time frames. And yeah, that's kind of the big level of resistance for Tesla right now. I'd say support for the most part on the daily time frame is down around that level, 187.6. Another name today, AMC. Technically speaking, I was keeping a very close eye on it. I have calls on AMC. So I just talked about how I was able to take 50% profit on my GameStop calls today. I sold those. I took the profits, thankfully. But AMC was the one I decided to overnight. And it's down a lot after hours. Thankfully, though, the full position size of my AMC call position is still less than the profit I made today. So I'll still technically be up on the week, even if those completely go to zero tomorrow morning. But of course, it's like never fun to be overnighting calls on something when it's down 25% after hours, but it is what it is. So yeah, I mean, I was watching this wedge breakout, hidden bullish divergence, and then just a bunch of different pieces of news came out. This is one of the main ones. AMC stock plunges 22% after company increased to settlement terms, opening up for ape conversation. So, you know, not really what you want to see, but news can come out at any point, and that's why thankfully the position wasn't anything crazy. It's still going to be a little bit of a pinch, but it's just a part of trading, I guess. So after hours closed down at around $4, so lost about $1 per share. And that's going to be a little bit interesting. Pretty much closed right around those lows, even a little bit under. So you can see that this level right over here, 407, is pretty key. It was a gap fill. That was your low in March. And if you can, you still got 378. I don't know if there's anything historically here. 378 kind of has a little bit of these highs and lows, but yeah, it's pretty much down to that white line after hours. And I think the most important zone was this blue one. So being under that from a larger time frame perspective is not great, but of course, you could definitely get a dead cat bounce or something just because it's down so much so quickly. But it's just, when you get news like that, it just becomes gambling, at least for a little bit. So I'm just gonna take it as it goes tomorrow morning. I mean, I'm looking at it as I already lost a full position at this point, so gotta just take the losses, move on, and it is what it is. But apart from that, let's look into some other names. Start off with I'm gonna start off with Shopify. Actually, I was doing a one-on-one call with a premium lifetime member actually last week. He wanted to take a look at it, and this is one name I am watching. It's short term, you got to keep an eye on this little channel, but if we just leave this for a second, the bigger picture here is hidden bullish divergence is playing out. You've got an inverse head and shoulders breakout, back test, and move higher. And if we go over to the weekly, you can see the same thing there. Little inverse head and shoulders is trying to break above it, probably getting above that 53.62 level. You can see these highs, these candle body lows, and then this candle body highs from 2020, above 53.62. I mean, that's what really sets up a lot of potential room here. So it is one other name I am watching right now. Roblox. This is technically still a swing. It's already hit 2 of the targets, but take a look at this. What if we just look at it like this for 1 second? A massive inverse head and shoulders. Okay, let me put a neckline right here. That is what Roblox is testing right now. So we will see. This was a public swing alerted for free in the Discord. It's already hit 2 out of 3 targets. Third target's 51.60, just under these highs over here. Nonetheless, very nice move for Roblox. And actually, I don't know, it's probably still charted. Let me see. What time frame did I chart that on? Might have even been the 5-minute. Yes. On the 5-minute on one of my streams, maybe last Wednesday, I tried out this inverse head and shoulders, and we had a little bit of a move because the market pulled back on Thursday, but kind of like got back above that inflection zone, and that's really what set up a lot of this 3-day move as well. Meta at $213 now, ascending triangle breakout. This was in the premium watch list for the week. Pretty solid day. Just from the open and close, it went up about 2%. Yeah, 207 was a very, very key level. I literally took everything off my chart except for that level for right now, and it's above it. So it's back above a very critical historical resistance for right now. Apple up about 1% today. This one I've gone over every single night on stream. You have the inverse head and shoulders, or the cup and handle, however you want to view it. You got the breakout, the back test. Literally as we were right here, I took out this tool on the stream and I said, honestly, the reward to risk here, simply just targeting, it might have been that gap fill. Simply just targeting that gap fill and then putting a stop right here. It definitely wasn't that one. 1 second. It was this gap fill. Yes. And I pulled out the reward to risk tool as we were exactly where I just put this. Let me move this out of the way for a second. Right over here on the stream live, drew it out. And said it's a 3 reward to risk, and it's off the back test. That's exactly what happened, and even more actually, like straight up. So in hindsight, that was a really cool little Easter egg from the stream, I guess. But yeah, you got above that gap fill. It's just been going crazy. Not much up until 171.5, and I mean, Apple's already probably about like 70% back up to its all-time highs. So not bad at all. Apart from that, NVIDIA still going higher. It just keeps going at this point. It's kind of crazy. I will say, however, that level right there, 288, okay? I feel like a broken record talking about all these levels and how maybe you see some resistance there, even though a lot of these levels you did use them, you just broke above them, but you did test them. 288. All right, look at this high from March of 2022, about a year ago, and these couple of lows from November of 2021. That is the next level. I don't know if something will happen there or not. It's still in this wedge, it's still overbought, but it's just in a different world right now, kind of. And for the classics, Fisker down today, down 3%, still above 560, but still under 650. It's a very 50-50 area, technically. Maybe a little bit of a bullish pin bar candle there. You still got the classic bullish divergence. I'm just waiting to see which way that breaks. And then finally, CLOV. I don't know if you even want to count this as a wedge, but if you do, it's testing a breakout. MACD flipped to green. Still around the same lows from last December. So just in general, it's a very important area for this to hold, hopefully. It's getting blurry again. Yeah, it might just be going in and out like that. But as long as you can still hear me and stuff. I do see it on my screen that it's blurry. I gotta look into my settings again. Because it looks like it's very weird. Good now. Yeah, I don't know why it's doing that. Yeah, AI. I've been talking about this one on the stream for a long time too. I actually played calls exactly on this day. It was probably my best trade in the last month. That was a month ago, pretty much. And yeah, it had this range. It broke out of the range. We were talking about this little low right over here last week, and it played out. You know, if you want to talk about a bullish rectangle, this is a very textbook example of it. That's literally it. Markup, consolidation phase, but not really in a distribution type of way. Very a little bit away from, I'd say, Wyckoff stuff and more like Bulkowski stuff. Bullish rectangle, breakout, continuation. And today, I've had these levels for a while. Today, you did pretty much respect that 3450-ish level from these highs in December of 2021. Topped out there. And at this point, I mean, it's just kind of going straight up lately. It's just, what are the levels? That's really all I can say for AI right now. My voice is getting like raspy. 1 second. So yeah, that is AI. It's pretty much everything on my watch list that I wanted to talk about for tonight. Futures are flat. Appreciate the sympathy seeking, Max. Yeah, AMC, you know, it is what it is. Just trying to make it back tomorrow. And then Max, as I was doing that, you said, can you look left for next levels? Yeah, these are the levels I've gotten. I don't know, I really hope I'm not losing my voice, but I don't know why, it's just like not there right now. So yeah, and that was a pretty solid little run of some charts. And if you enjoyed the stream, hit the like button, hit the subscribe button. I'm gonna go see what's up with my voice, because it's kind of hard to stream when I'm talking like this. I don't even know if I sound different, it's just hearing myself I sound different. But we got through most of the charts, so it's all good. And yeah, thank you for watching the stream. Hit the like button, hit the subscribe button, join the Discord, links in the description. And remember, 1 like equals 1